Back on Morning Mover, shares of Nvidia being dinged after reports the chipmaker hitting pause on production of its H20 AI chip. According to the information, the company told suppliers to stop making it. It comes after reports that Beijing warned local firms not to use the chip. The H20 was meant for China, but it's facing tough competition from homegrown players like Huawei. At the same time, Nvidia CEO says they're talking with Washington about whether a new, more powerful chip for China will even get the green light. Time now for Options Corner. Joining us for a look across this chart for NVIDIA's Rick Ducat, lead market technician. All right, Rick, what trends do you notice?
Well, see, we can easily see on this chart that NVIDIA is outperforming not only the technology sector, but also the S&P 500 to a large degree. NVIDIA is up about 41% during the past year. If we were to look at kind of the chipmaker group as a whole, though, we can see the SMH ETF here, the semiconductor index, up about 18%, 18.5%. Intel and AMD are the underperformers. NVIDIA and Broadcom are the outperformers. Actually, Broadcom's doing a bit better in terms of percentage gains, actually a lot better, 78% versus 41% here. So an interesting sector, a lot of big winners, big losers here, a lot of extremes. So if we were to think more specifically about NVIDIA, we can see our candle chart here shows that for the most part, price was enjoying this upward sloping channel type shape here, although we have struggled to overtake this level near 184, 185 or so. Price dropped below that trend line here. We had this large red bearish engulfing candle. Now, as of yesterday's close, price was not able to retake not only the trend line, but also our yellow 21-day exponential moving average that comes in just below 177. So the highs 185, the lows 165. That represents our high close and our low after the breakout. Then we can also see it's pretty close to the 63-day EMA in orange. Our line would range there between about 162 to 165. One more thing to consider is our options expected move for the next week here, about plus minus 7.8%. We can see that gives us a range that ends pretty much just above those old highs there, Diane.
All right. Thank you, Rick. Appreciate that. Now to take us through an example trade, we've got Tom White, senior options contributor. All right, Tom, what's the approach for an example trade for NVIDIA?
Well, I think a lot of focus is going to be on that earnings event, not only for NVIDIA, not only for the sector, but for the entire market, because it's such a big component within the S&P 500 and the NASDAQ 100. So we're going to keep that in focus. But I wanted to look at a strategy that doesn't rely on earnings next week, where it gives myself a little bit of duration in this position. Implied volatility levels, the further you go out, they're a little bit low due to the fact that we've seen the stock rally pretty significantly over the last year, up about 30% so far here in 2025. So the first strategy that I'm looking at is taking advantage of that lower implied volatility, giving myself some duration. So going out to the September monthly options, they expire on the 19th. You've got 28 days till expiration on this one. So you can still take advantage of the earnings event, but if the stock doesn't go your way, in this example, we're looking at a bullish call vertical, that you still have some time in this position for it to recover. So buying the 172.5 strike call, the stock's going to open up just about $173 here this morning, down a little bit. So you buy the in-the-money 172.5 strike call, and then against it, we're going to sell the 185 strike call. That's just above the all-time high that we reached a couple weeks ago. So $12.5 wide bullish call vertical. We're going to pay roughly about a $520 debit on that. That's going to be your risk, $520 per spread. That can expand to $15 or $12.5 if it gets above 185 at this. Your break even 177.70 to the upside. That's where you need it to go above to become profitable on it. That's only about 2.5% above the current share price. You only need about a 7% move to get back to 185, which would be max profitability on this one. But I think if you take a look at what you can pay for this vertical, where you got 28 days in, as opposed to the August 29th weekly options that expire in 7 days and would capture that earnings event, the difference is only about 30 or 40 cents. So you're paying just a little bit more for extra duration and time in this, but then you have flexibility also. If you get the move you need post earnings next week, then you can close it ahead of expiration.
All right. Thank you, Tom. That's an example trade there for NVIDIA. We've got earnings coming next Wednesday. Appreciate it.